Hi everyone and welcome to Crypto Signal. Today we are going to analyze the entry of institutionals or not into Bitcoin. So mainly we are going to watch at the ETF already in line on Bitcoin. We are going to watch as well the shares that are supposed to reflect the Bitcoin and the cryptocurrency market, and some special indicators that I prepared for you and that are very interesting to watch at. Let's go straight into the charts. What do we have here? Well, we have the BTC longs indicator on Bitfinex. As you can see, the BTC longs meaning margin traders which are entering into position. What you can watch is not in dollar, it is going to be in Bitcoin. So 94,356 Bitcoin at the time that are in long position margin on Bitcoin. So we talk about very big wallets. And the chart in orange that you have here is the chart of the price of the Bitcoin, of course. We are going to analyze this chart and to understand this indicator pretty well. The idea here is, and we are going to start from the start. Well, at the start, you had in 2018 longs going long on a price which is going up, and then the price going down and longs getting out. That's quite normal at the start. Here, they continue to take some long positions while the price was going down. Then they de-risk themselves. They get out of the risk when the price is going up. This is pretty normal also. Then they start to build some long position when the price is going down. So this is they protect their margin. If you prefer, they continue to enter while the price is going down, and then you see the price is rising and they don't really believe in this pump, so they get out of position and they even reach an all-time low here. What happens next? Well, the price continues to pump, so they get wrong at this time. And then they enter very, very powerfully into this position. So here they took a lot of longs while the price was going up, and we're gonna stop like right here, okay? Then we have the big correction of the summer 2021. And they continue to protect their position, so they still believe that Bitcoin is going to rise up again. On the way back up after the summer 2021, they de-risk themselves, so they get off margin, they take their profits, if you prefer. Then what happens? We have the very big correction since November 22, and what do? They start to build a contrarian trade over there, right until here, okay? And they stop, there is a plateau here, you see. They stop to take positions exactly at the bottom, all right? What happens next? Well, the price is going up and they start de-risking themselves. You see some position, or could be liquidated here or could be just protected. They take profit here or they get liquidated on this pump here. And what is interesting is what is happening at the time, you know? We have a plateau as well, the same kind of plateau that we had here. You see, we made the FTX plunge, huh? And here nothing happened. They didn't take more longs, nothing happened. Here it is about the same level. So did we find the bottom here? And the big question at the time is why they didn't take profit on this second leg up here. Sorry, I little bit clean the charts. So on this next rise up here, you don't see any position de-risking. So do they believe, these whales, that it's okay, they can still protect the price? And are they like into, well, if the price is going to dump, then if the price is going to dump, then I'm going to protect my position again to get back to, I don't know, 100,000 BTC, whatever. Or did we find a bottom here? That's a good question to ask. What does this plateau means? We have more longs here coming up. It's not like crazy, but we have more longs and even more on this drop. So they don't have it right all the time. You could see here they were wrong. I mean, they missed a part of the bull run that was here, even though they take profits here, which is quite normal, huh? You know what I mean? Like they are really taking their profits, and then they enter on the second leg. That's a good question to ask. I mean, this is a very good indicator. It's very hard to analyze this, but it's very interesting. Then we are going to look at the Riot share. Riot share is in a very big now correction. It got a massive rise. We're going to take off the BTC price. it's got a massive rise lately, and now it's just starting to kind of test this W that you see here, which is the kind of structure which return the price up. They are getting back very fast, getting down very fast. So the big question is, at this time also, is this going to stand for a support for the institutionals to get back? Do we have a real support here, and could we get back up, or are we going to have some kind of here a big range of accumulation standing out for quite a long time? MicroStrategy, same thing. We have this accumulation trend here that is holding at the moment. We have a very nice support here. Is this going to hold or not? If it's holding, it means we are going to make a bigger structure, and this inverted head and shoulder is going to stand, and it's going to continue. If it drops below the support, it means we are going to stay in an accumulation range between, which is very interesting, 130 and 400 on MicroStrategy. Very interesting chart here. Marathon Digitals, same, we are still holding an accumulation. Marathon Digital is less good in terms of structure, but otherwise, if we make here this big structure and that we break this level, it's very good. We see this very sharp drop since 13th of July. So you could see here that even though the Bitcoin was at this time doing something else, if you see, I'm going to show you the chart here, was doing something different. You see, it really well reacted to this pump and very bad reacted to this drop. So that was the ETF spot hype, let's say, and that was the drop that we had lately. So very interesting as well. Do we take a mid-range here to rebound, or are we going to get lower and come back to this $4 range? Coinbase quite interesting as well. Well, if I had to find a range in here, it would be that one. Do we go back to the very lows of the range? Is this an accumulation which is going to happen maybe even at $29 or $30 here? Is Coinbase going to lose his all-time low, or is it going to, at the moment, get this support, which I did not materialize on the chart here, but is this support going to hold? You see, it had pretty much quite convincing holding lately. We could even like take it a bit wider. Going on to this, you see here, resistance is broke, big pump, resistance, and here, is it going to hold as support at the moment? Very, very interesting. Minus 37 for Coinbase, which is really high. But we see that now BlackRock, I think BlackRock is buying more Coinbase. Actually, BlackRock has a ETF which is called IBLC from iShares. I'm going to show it to you here. Which has an interesting price action as well. This support is it did a very nice head and shoulders here. Probably the neckline is somewhere around here. Is this going to hold as well? And this accumulation then will kind of hold, or is the support going to be bought again? What I really like on IBLC is that on the last Thursday and Friday, this was bought straight away. You don't have so many spikes here in this chart. You see the spikes. I'm talking about these candles. You see that this never happened actually. Even if you see from the moment where this was into the this chart was made, I mean from the moment where the IBLC went out, we never had such a spike. So that's interesting to see. Some people really bought high here. I mean, they really bought hard, and that's what we're going to see as well. GBTC and the Grayscale BTC, same thing, you know. I mean, you see the GBTC has a different structure than Bitcoin. We have more like some accumulation, which is going further, which is going harder, and that's interesting to see as well. Why is GBTC going faster than Bitcoin in terms of why doesn't it correct that much as BTC corrected? Because you could see BTC is almost around here, there, huh? Okay. The idea is there is a premium on the Grayscale BTC. I'll try to find it somewhere. Not this one. not this one, sorry. We're gonna find it. It should be over there. Yeah. Grayscale owns 623,000 BTCs. Their share, the holdings per share, which means normally this is what the price of the share should be, is 23, but the share at the moment is only 17. So you can see that there is a discount. If you buy now this paper BTC, you're gonna have a discount. You have a right on a real BTC, which is going to be discounted for 25%. So it's quite interesting to see that this support is more interesting at the moment than Bitcoin itself. If you want to know about accumulation of these institutionals, which is at the moment the subject of the video, you can see that we accumulated a lot here. This is the accumulation trend score. It means if I buy one BTC but I have a wallet which owns a lot of BTC, I'm going to wait further into this chart. Then this chart is going to go into the violet, and here you can see that we had a distribution phase here, and we are getting back to orange. So there is big wallets at the moment that are probably into buying. So that's quite interesting to watch as well. Well, we're gonna go back to the chart and we are going to analyze a little bit all of this. You understood the video of today was really into understanding, are the institutionals interested or not about BTC? What we can see at the time is a fear from the institutionals, fears of regulations, fears of inflation, which means you go risk off. Very nice, let's say, returns on your money, which stays on cash. So many people go risk off. But the idea here is what you can see on the chart, and I suppose it could be quite interesting to watch it here. Yeah, the same thing as what I showed you on the chart of the BTC IBLT. I think it was IBLT. Yeah, there is here all the spikes, they are rebound. Okay, which means here we take the liquidity, but it's being protected. We take the liquidity, it's being protected. We take the liquidity, it's being protected. So some people, they start to protect their positions exactly on this level, which is around $26,000. Sometimes it works, sometimes it doesn't. You see that here, for example, this level was protected, we had a pump, and people, they just de-risk themselves. So I would say if we have a pump here, I will de-risk myself somewhere between 27,200 and somewhere between 28,500. We talk about here taking a risk on a big level of leverage. So, I mean, let's say you enter a trade level 50, okay? So you enter an amount of money and you are ready to go until the liquidation. You enter it around, let's say 25,600 here. When you do 27,200, you're gonna take your maximum take profit, all right? So what did you do? You do, on a 50 level, you're gonna do 250% on your position. So that's all right. Imagine now that just at the 2% correction, which is somewhere around here, you totally de-risk your position. What does it mean? It means I enter that 25,600, I get long, I suppose that we are going to touch again 26,200, and here I sell 50% of my position, okay? So what does it mean? It means I can go after to the liquidation, which will be somewhere around 25,200, I think. I was a little bit high on this. It's more something like here, and still I'm at break even. So even if I get liquidated here, I'm at break even. What can you do when you did that? Well, you can take back this 50%, so your whole position, and you can protect your liquidation a little bit further. If you believe in this scenario, it's okay to do so. So let's say you used 2% of your portfolio, of your wallet. You use 2%, level 50. Okay, so it means you trade with your wallet basically, but you use the leverage, you use the credit to trade with your whole wallet. Here you take your 2% back, you know, so it means there your position is kind of free. All right, then it means also you can protect your position from being liquidated a little bit further, and that is the interesting part, where you took your 2%, you de-risk 50% of your position. Okay, you're gonna make 50% less on the rise up if it doesn't touch back, but that's okay, that's all right. You've been de-risked, your position is free. And on the other hand, if the position goes down, then you are going to protect it somewhere around 25,200. There you rebuy again with again 2% of your position because you didn't lose it, all right? On the way down, you rebuy your position over there and you protect it. You protect yourself until you get the real movement. The real movement, you're going to get it with your runners. Part of your trade has to be a TP max around 27,200, another TP around 28,500, which is the goal here. We don't aim for new, and then you let maybe 10% of your trade, something like that, a little bit less. And I talk about 10% of the remainings of your 50%. When you took it off, you took off half of your position. You leave 10% out of this, the remaining trade, to go to 33,000, 40% if you like. Let the runner go, let a piece of the runner go, because this is what is going to make you doing money at the end, your runners. And in the case here, the price goes up, and you want to open some shorts here on the way up and you get liquidated on your shorts, you're still gonna have your runners running until $35,000, let's say, on this trend, for example. That's the idea. Well, I hope you liked this video. We didn't do much liquidity today, but we are going to make more out of this tomorrow, probably. And don't hesitate to push a like, to subscribe to the channel, and to help us getting bigger. Crypto-Signal is a good channel, is a well-done channel in France. We start this channel now in English, and let's help us to get this through. Thank you very much. Have a nice day. Bye-bye.